Good morning, this is Larry Edelson with my Uncommon Wisdom video for Monday morning, June 11th. Well, we've certainly seen quite a bit of action as far as the news goes. Europe's crisis continues to unfold, the latest developments being Spain basically failing and shut out of the credit markets. I don't believe Europe's leaders will come together again. It may look like that on the surface. They're holding emergency meetings, but they have yet to come up with any kinds of policies or procedures to stem this crisis. And in the long run, even if they can kick the can down the road for a few more months, they're not going to be able to stem a complete sovereign debt crisis and the breakup of the euro. So that's what we're dealing with now. That will eventually migrate to the United States, and we will see a sovereign debt crisis here in our country as well. All the ingredients are in place for that to happen. Right now, however, the U.S. is looking relatively good compared to Europe. However, the markets are still in a disinflationary mode, which I've been forecasting for you. So let's go right to the charts. Here's a new chart that I've done up for you. It is a weekly chart of gold, and as you can see, gold has broken this major uptrend from the low in 2008, and it's so far been unable to penetrate back above this uptrend line. We could see a brief rally up to about the $1,700 level, but even that would not turn around gold's immediate downtrend. It's far more likely that we'll continue to see lower lows in gold until there's coordinated central bank intervention in the sovereign debt crisis, and I don't see that occurring immediately. So the bias remains to the downside in gold. Let's now look at my latest updated chart, a weekly chart of silver. Here you can see silver is making lower highs and lower lows. Basically, it has tested the $26 level no less than 5 times, counting the last couple of weeks in here, and that's usually a sign that it's breaking down that support floor here, and the next test will likely penetrate right through that floorboard and see silver drop substantially lower to at least 23, where I have some system support, and probably even lower to 20, perhaps even just below 20, depending on how long it takes for silver's next leg down to unfold. Now, let's go immediately to the dollar. The dollar's been acting very well. Here's the uptrend over the last few months in the dollar. As you can see, the dollar index is broken above this wedge triangle here. That's a show of strength for the dollar. The dollar is really only rising substantially against the euro for obvious reasons. There's a flight to cash going on, liquidation of assets in Europe, and that's boosting the dollar, which of course is adding to the disinflationary aspects of the commodity markets right now. Let's now go to the Dow Industrials. Here you'll see the Dow. This is actually a monthly chart of the Dow. I wanted to zoom out so that you can see some more action here. The Dow has rolled over a bit. We'll likely see a test of the low 11,000 region in the Dow, but as you can see just glancing at this chart, the Dow is holding up better than other asset markets, better than commodities right now. Why? Because the stock markets can, and I've mentioned this to you many times, take on the aspects of a safe haven when there's a debt crisis going on in the bond markets. You have to ask yourself, if money's going to be pouring out of European bond markets, where's it all going to go? Some of it's going to go into the pure cash, the dollar. Some of it's going to go into commodities. Some of it's going to go into real estate. Some of it's going to go into stocks. It has to go somewhere. Right now, more, I would venture to say, more of it is going into U.S. stocks than commodities, for example, which is helping the Dow outperform commodities in the short term. In the long term, I believe both stocks and commodities will be going substantially higher. That's it for this update. Stay tuned to my publications and my writings. This is Larry. Have a good week.